welcome you all to this episode of JDF's Chronicle. So, in this video, we'll be continuing the video which I was talking on yesterday. We were talking about few underrated stocks to buy at this time when the market is being corrected heavily, and I've also insisted not to purchase in a single take. So, and also I've insisted to do your own research. So, please don't purchase if you have 100 rupees. Don't put all the 100 rupees at a once at this time. Let's wait because few predict, and even the crisis and things happening around the world, the geopolitics happening around the world, insist that the market might even fell down. Even India is facing few troubles. FIs are continuously selling, whereas DIs are supporting the market, and our finance minister is putting some bags of money in the market for LIC IPO in the name of LIC. So don't know what is happening. The geopolitics are interesting. We can't predict anything what happens next day. So we are living in the 21st century, but even then all these happen. So there's no insurance for anything. So let me continue after this caution. The remaining stocks in this, I'll be talking about two monopolies. One is underrated and one slightly is being treated well, but it deserves much better. So the first stock is CAMS. So CAMS, Computer Age Management Service Limited. So this CAMS business model, few might know, few might not. You could have a look at their website or you could search in Google and see what is CAMS. So basically, people in India have started purchasing a lot of mutual funds. Mutual funds are also a key player who are holding the market now. So when there are plenty of people investing in mutual funds, the back end work of mutual fund is mainly done by CAMS, like 70 to 75 percentage is done by CAMS. So they handle the back end work of mutual funds. So lately they are treated as monopoly nowadays, so they are the only people to do that. And let's come to the market cap, 11,502 crores. So also many treat CAMS as an tech company. They are not tech company. They are just a back-end program. That's it, but a very good and underrated company. And then the current price is it's been traded at 2,352. You may think, is this underrated? Yeah, it's underrated. There have been big depression going in CAMS now. Let me show that later. And their highest is 4,067. Now you know why I said this is underrated now. So and then the lowest it have went for the past year is 1,742. The dividend which has been given is 1.15 percentage, which is pretty impressive. And then the stock P is 41, that's okay. And then the return of equity is 57.7 percentage. That's great. That's great. That's absolutely great. So here is the view of CAMS for the past 5 years. It have started in 1,400 and it have ended in 2,300, but in between during September of 2021 it have went nearly almost 4,000. That was a great sign, but then from then it was going down. There are plenty of reasons for that. I may not be the right person to talk about that because I don't know much about that, but there are plenty. I've read a few about that. You could also, if you are interested, you could search it in Google and you could read it. But from then it has gone down a bit. It isn't reacting much. So that's this. And then the pros and cons. Company is almost debt free. They are a monopoly and they are debt free. Also, the next company which I'll be talking is almost debt free. And company gave a good ROE and company is maintaining a healthy dividend payout, which I've said 1% is impressive, 1.10%. And then the cons, stock is trading at 25 times its book value, that's okay. Promoter holding has decreased, even that's okay. The company has delivered a poor sales growth for the past 5 years. This is the reason why the sudden reaction to the market has been, but that's okay. This is a monopoly. This is surely going to come out well, and this is being ranked sixth among its peer comparisons. So let me go this and cover this fast because I've already said you guys how to do the basic fundamental analysis in my previous video. If you haven't checked that, please check that out. I have talked about Manappuram Finance. Please check that out. So let's do a fast analysis for this and the next stock. So let me straightly come to the profit and loss. The sales is been increasing. Just see the numbers increasing, don't see the values exactly. The numbers have been increasing, the operating profit has been increasing, and the net profit, which is after tax, has also been increasing completely. So nothing else is required for us. The company is performing well, the dividend payment is here, and then the compounded sales growth is here. Here is a balance sheet. Let's directly see the total assets. Total assets are increasing rapidly. That's all. Perfect company, good business model, good numbers. What else is required? Business model, I leave it to you guys. You must check out and invest only if you could understand the business, or please avoid it. CDSL, Central Depository Service Limited, they are being treated well nowadays, but still it could get 5x soon. Sure, it could get 5x soon. The number at which it is traded today is 1358. Good. And then the market cap is similar to CAMS, 14,196. The 52-week high and low are here. Dividend is 0.6. Okay. ROE is 25%, which is decent. ROE is preferably greater than 17, 18 or 15% is a okay stock. So here is a map for 1 year, and let me show it for 5 year. Sudden drastic improvement, because CDSL, as I've said, CAMS takes the back end of mutual funds. CDSL takes the back end of equity buying and the stock market. So recently there have been several new investors in the market, including me, for the past 2 to 3 years count, I'm saying, because when COVID came, they realized how important this. So that's great. And let me say the cons first. Stock is trading 15.41 times its book value. That's okay. Promoter holding have been decreased for last 3 years, the same as scams. And company is almost debt free. As I said, they both are debt free and they are monopoly. Company is expected to give good quarter. They have been giving exemplary results for the few last quarters, and company has delivered good profit growth of 24% CAGR. That's good. Company has been maintaining a healthy dividend payout. Impressive. Let's come to the peer comparison again. 4, that's good. Quarterly results, sales is been increasing, revenue is been increasing, net profit is been increasing. That's all. Sorry for rushing. I have just said you one time how to do that. So please implement and see how it's happening, understand how it's happening. So let me come to the main profit and loss. I was talking about the report previously, quarterly report. Now total profit and loss, sales is been increasing, and then the operating profit is been increasing. The profit before tax and net profit is being well. So this is the balance sheet. The assets are being increasing. There's zero borrowing because this is debt free. Zero borrowing. Very good, impressive assets. And also the cash flow has been pretty much good. The cash flow, yeah, I guess I've compared this stocks. So these are the two stocks which are monopoly. I would recommend these two stocks to purchase whenever there is a depression in the market. Whenever you feel these stocks get down for 4-5% in a single day, perfect time to buy. Buy step by step. Don't invest complete amount at the time. If you have 100, don't buy 100 seeing just the dip of one day. Wait. If you have 100, invest 40 or 50. Wait. If the market goes up, leave it. If the market still goes down, you could still buy further. So that would be an ideal way to invest in the market right now. I'll make a complete video on how to invest during this bearish time. Let's talk a lot about this, and don't forget to subscribe my channel, and please do like, share, and please put down in your comments that if this video was useful for you or not. Let's meet in another interesting video. Thank you.